Today's guest is Flint Jamison. He spent 20 years as an aerospace engineer, leading the design of the Boeing 787 wing and managing a $120 million defense program. Then he transitioned into real estate and eventually founded Vestus Capital, where he now helps engineers and tech professionals create real wealth through passive commercial real estate. Today, he manages over 2,400 units, $10 million, and brings a level of due diligence, conservative underwriting, and operator vetting that comes straight out of aerospace. Flint, welcome to the podcast.
Thanks for having me on, Leo.
Very excited to have you. I mean, it's just you have such an interesting background, Flint, because, when you think of entrepreneurs, right, you think of the guy that was in sales or like someone that just came from like a super scrappy background. But, for you came from aerospace engineering. I mean, that was just like, it's a world of preciseness, of risk mitigation, right? It's like a complete contrast.
Yeah. Yeah. What's funny is even beyond that, like in aerospace, it's the sexy thing to say. You're at a bar, you're talking to people and you're like, I designed airplanes. It's this really cool thing. When you're like, I own a real estate investment firm, people just glaze over
Yeah.
and move on. But it's all about lifestyle. It's a different
Mhm.
lifestyle. I'm working from home. I'm with the kids. I walk them to the bus every day. There's very much stress, but it's a different level of stress. I'm not beholden to, my last job, I had 50 employees and sometimes we were doing government contracts and sometimes the government wasn't going to pay us because they didn't have the money they told us they did. And then I would have 50 employees I was worried about losing sleep on. Like, am I going to have to lay off people? And that was like a rinse and repeat cycle, particularly with that job. So now I don't have any employees, it's nice. I'm only responsible for myself.
Yeah, I mean now more than ever, right? With the government shutdown and stuff, like a lot of
Yeah,
people are having uncertainty in their paychecks, right? I mean,
yeah.
you would assume that engineering is a very stable career path. Like, hey, your check's always going to be there. It's going to give you nice pay, but no.
Yeah, it's interesting. Even in the Boeing days, I think I left in the right time. Boeing's obviously been through a lot of challenging times in the last 10 years.
Yeah.
But yeah, even to your point, so going from engineering and program management, obviously the program management, financial wise, was a good skill to have. Being an engineer, just doing analysis is a great skill to have. But the marketing and sales, which is what basically my job now, I don't like to admit it, but I'm a marketer and salesperson. And arguably I suck at it. And I think that's why I'm good at it. It's like this, a bit of a conundrum because when I get on calls with investors or potential investors, I'm not a sales guy. I'm just some dude who has a great opportunity for people to invest in. And I'm just another human. And I think that works to my favor because I'm not some super polished salesperson trying to, talk people into a deal. I'm just like, I got a great opportunity. If you want it, you can have it. You don't have to. It's not for everyone.
Yeah. It's funny because we were just talking about this before we hit record that there's a lot of just useful skills in general. It's not like you have to create a whole profession out of it. You don't have to be a marketer or a salesperson, but like marketing and sales, they're super useful skills. I mean, end of the day, it's like, hey, how do I communicate the opportunity I have to people to see if they're interested? And if it's a fair value to them, they'll make that transaction. I mean, the decision's up to them, of course.
Yeah. Yeah. It's really more of an education game in our world too, because what we do is not well known.
It's
Yeah.
true.
And when you educate them, you're kind of building that trust. Actually, shameful plug, I just wrote a book. I
Nice.
released a book.
Tell us about it.
Here, let me grab it. I need to have one close so I don't have to get up and walk away from my desk every time. But it's The Engineer's Guide to Real Estate Wealth. It's a lighter read. So some books out there, here I go into my full pitch, put on my sales
Yeah.
cap. A lot of books out there on investing, like the Hands Off Investor by Brian Burke. It's a thick book. It's almost like a textbook meant for passive investors, but really the level of depth, it's more meant for like GPs. It's hard to get through.
Mm.
I was like, you know what, engineers, I target engineers and tech professionals. they don't want to go through a heavy book. They want, the more surface level 101, 102 level stuff. And so I try to educate syndications, make it easier to digest.
Yeah, yeah. So tell me about that world. I mean, as an engineer, like what's their world like? What do most of them get wrong when it comes to, building wealth and just going about as an investor in general?
I don't know that I would say doing things wrong. To be honest, I'd say more in general in society, everyone just goes for I'm just going to put my money in a 4K and maybe do an IRA and that's it. And they're just running with blinders on to the world of what's out there. They aren't playing the game that the high net worth people are. High net worth, they figured out this game, that doing tax advantage stuff. They're they're putting their money in asset classes that could be more stable. They're than the stock market. They're putting their money in places where they get way more growth. That's just like normal. It's weird. Sometimes you jump out into what quote unquote alternative investments, and you start hearing these big numbers like 16% or 20% average annual returns. When you're coming from the stock market, the S&P is doing 7 and 8% over the long haul. You hear these big numbers and you're like, oh, that's a scam. But in reality, you've just never done it and you've never been exposed to it. Some of this stuff is normal. So I really think it's just not having the exposure, not the willingness to educate, to jump out and do different things.
Mm. Yeah, I definitely relate to that because I was looking at my retirement account the other day, and I was just making the calculations. I was like, 6.5% average returns. Like that's kind of trash. I
Is
mean,
that is that before fees or
I actually
after
don't know.
fees?
I don't know.
Because
Maybe
if it's
after.
after fees, you got to take like another 1% off.
That's true. Yeah, and just it was interesting to think about the world before private investments versus after. I mean, like you and I, like we were both kind of outsiders at some point, just looking in, and we're like, okay, like how did the rich get richer, right? They just play a different game. They have access to different opportunities, and I mean, it's not like they put everything into private investments, but it's like, hey, they have a portion of it to it
Yeah.
that's like more, illiquid but higher returns, and like that's just how they sort of build their own structure.
Yeah. And some of it's just purely a great place to store wealth.
Yeah.
They need a tax advantage place just to store wealth that's not in a savings account.
Hmm. So Flynn, I'm very curious. I mean, just from your world, like back in engineering, like what was that like? And like, was there a moment that you're like, okay, I gotta switch to real estate, or was it more like gradual, seeing
No,
the light?
it was very much gradual over several years. I was originally just like listening to podcasts. Honestly, it started, I was back in 2018. I got a dog and I'm having to walk him every day. But I noticed while walking every day, I'm starting to listen to podcasts. And I was like, well, I should just educate myself on how to make different streams or like how to invest in the stock market better. Cause I always sucked at it. I'd always lose money trying to just do individual stocks.
Hmm.
And then one day it was like, hey, real estate, do the BRRRR strategy. And so I went down that rabbit hole. And then I ended up buying a duplex and doing the BRRRR strategy. It was okay. But from there, I was like, there's got to be something better. Because when you start doing the math, I was making $300 a month per unit, which was above average for the
Hmm.
industry at the time. It's like, all right, how do I make $100,000 with these properties, assuming the average is 200 a month? Like, well, 50 properties. At that point, I was like, the level of effort it took to do that one, granted, it gets easier, but I mean, the amount of liquidity I need and all, it's just like, yeah, it's going to take me forever. And then that's when syndications came in and it's like, oh, scale up, partner with people and buy 100 unit in property. Yeah. So that rabbit hole since 2018 till 2023, at 2023, I decided, hey, you know what, I'm going to step out now, step away from my day job and try to do this real estate thing full time.
Nice, nice. Yeah, I think you're right about the duplex and stuff. I mean, that's kind of like where a lot of people come into the world of real estate investing, right? I mean, from single family to multifamily, like now you're managing a tenant, but especially in today's world where there's very little to any margins at all. It's just very hard to make money. And I've noticed similar thing in my personal investments. And it's like you're spending how many hours a month managing this to get how much, and then you're taking on the risks. And like, hey, if a water heater breaks, you're kind of screwed. Like, there
Yeah.
goes your profit for 8 months, or like,
Yep.
I don't know, just
Yeah.
doesn't add up.
Yeah. Some people make it work. If they can scale fast enough, it works. But man, it's really hard to do when you're doing like 80% LTV,
Mm,
because then your margins are so thin.
yeah, for sure. So when it comes to transitioning, I mean, of course, like there's a lot for you to learn. I mean, I'm assuming like you as an engineer you have just a great ability to learn skills, and especially when it comes to the concepts in real estate, I'm pretty sure like you can grasp it pretty quickly because it's like math based, right? Especially on the commercial side. But I mean, what skills have been helpful for you, to transition over from like engineer to entrepreneur?
Yeah, I mean the analytical side has been useful. Like I said, the program management, when I was running that large program, I think just the skills I got in program management is was probably more valuable running a business. I mean, the engineer side of me wants to do analysis paralysis, and the PM in me says stop. You got a deadline. You got to figure this out. You need to make some assumptions and be a leader and move forward. So the fight within my own brain. Um, I think that's probably the most valuable. The other thing is, if we want to go stereotypical here, engineers. You get the engineers that are very meek, very introverted. I think also in the world of program management, I guess I've never been that one. I've always been a leader, like an engineering lead and to management and so on. But that's also huge in this world. It's all about networking and communicating, right? The whole sales thing. I got to be a great communicator. So I think those are probably the best. And the network is by far the most powerful. You got to be able to network to find the deals, to find the investors. And it's amazing where it's gotten me.
And you probably weren't used to networking as an engineer, right?
No, not at all.
So how'd you pick it up? How did you get better at it?
I think, I don't know. I guess the talent or skill or whatever it is that I had originally to just be a leader and communicate just worked. And then I just started going to conferences, and then you're on Zoom meetings and meetups, and it just naturally happens.
I think, yeah, you touched on an interesting point that proximity really means a lot. So being in a place where you have access to the right people, that is one of the most useful and underrated things that you can do to set yourself up for success. I see there's a notion out in social media. People are posting like, "Hey, look, young people they should live in one of the top 10 cities in their 20s if they can." And but before I moved into New York City, it was like I was in the suburbs of Massachusetts. I was like, who cares? I mean, New York's New York. It's not that much. But coming here is like, okay, you can actually meet a lot of interesting people that they're all motivated. They're all sort of going after whatever they want in life, and there's genuinely like ways for you to sort of trade value, so to speak, and like help each other out. So
Yeah.
I think putting yourself in the right rooms and like kind of paying that price a little bit is necessary.
Yeah. And I also find it fun to pay it forward too, because a lot of people will come to me and ask just quick advice on things. And I mean, I've gotten a lot of help from people willing to give me their 2 cents. So I try to pay it forward, and ultimately it'll probably come back. It's a whole, I don't know if you read the book, The Go Giver,
Yes, I
but
love that book.
I mean, that's kind of the heart of that. Love it.
Yeah, I think I sort of have an internal debate with that too. Like, I mean, as a person naturally, like I'm very giving, positive, and stuff. But at a certain point in time, I'm like, okay, do I? I mean, I have to run my business, and like, there's people asking for help, and it's like, okay, do I distract myself from my business to help this person? And like, what's the right balance, right? I mean,
Yeah.
do you
Yeah.
ever relate to that?
Yeah. I don't really do, hey, let's have coffee so I can pick your brain, because that's a lot of effort. When it really comes to pay it forward, it's like I'm already in a networking event and I happen to be in the hallway and just meeting people and they start asking questions. That's really where the natural, I guess, free mentorship comes in.
That's fair.
But you're right. Yeah, if random people are even brokers trying to sell me stuff. Hey, let's get on a call. I'm like, okay, before we get on a call, here's my buy box and tell me if it fits your buy box before we get on a call because
Yep.
we're managing our time.
Yeah. Yeah. I think more importantly is energy management, especially like entrepreneurs and stuff. Like, I mean, I work super long hours and I think it's a matter of managing your energy and focus. Cause like there's days that like you feel great and amazing and like great things happen. And other days it just knocks you in the face and you're like, oh.
Yes. It drags you. Yeah.
So yeah, I mean a matter of like managing your energy, like what activities give you energy, what activities take energy away from you. So I think that's important too.
Right. Totally agree.
And how do you manage your day?
I could do it a lot better. I do. I had a mentor once. He's like, you need to fill every minute on your calendar, even if it's block this out to do this task. I tried it, but I stopped because I was like, I'm annoyed just filling my calendar with things that I'm just going to do. So, yeah, arguably I could do way better. So I don't know that I have a good answer.
Yeah, I think a lot of it is very individual. It comes from listening to yourself. I notice it a lot too. Like when you hear like the kind of advice off the shelf, you know, that you see on social media, people are saying like, "Hey, try this. Do time blocks. Do that." But yeah, I mean, it doesn't necessarily work for everyone, but there is something in there. I mean, I think it's important to experiment and see what works and keep doing
Yeah.
what works.
Yeah. Yeah. I never found it.
Yeah.
I found it more annoying to me. It's like I'm creating a task to just put time blocks in place. It's more a
Yeah.
task. It's like a meeting to have a meeting. That's the way it felt in my mind. I'm sure if you do it more, it becomes
Yeah.
useful.
Yeah, I have this conversation with my team a lot. It's like you can get organized and stuff. Like it, like remember in college, there's always the girls who you know they have the most prettiest notes, like 7 different colors and like little flowers and stuff.
Yeah.
And then for me, I'm like barely scribbling. I'm just like trying to keep up. Like I have chicken scratch handwriting and stuff.
Yeah. Yeah.
But you know, people do it differently. And
Yeah.
yeah, I mean, look, you can spend a lot of time organizing, but it doesn't substitute the action. You still have to learn the concept because like we got the same grades end of the day, so it works.
Yeah. More recently, I've been mentally checking myself saying, is this value add? Or is this, how much value add is this? Like I'll get, for example, I have Ahrefs, which is like this website, it checks my website and tells me if I have errors or, performance issues, flags things. I'm like, oh man, as an engineer, I just want to go in and solve those problems. But
Hmm.
I don't, my website is just there to provide validity that I exist. It's not a SEO optimized, people are going to find me. This industry doesn't work like that. There's not people out there with $100,000 saying, how do I invest? And then my website pops up. It doesn't work like that. So super optimizing for SEO is like very low ROI with the amount of effort put into it.
Yeah, that that's a really good point actually, because I think so. What we were saying earlier, like the ROI and like how to think about it is different for everyone for every business, right? I mean, whereas like optimizing for SEO might work for a roofing company that's local, but
Yes.
for people like us, if we're like wanting to attract investors, it doesn't really matter. I think it's about building like enough value add content, putting enough value out there. People sort of get to know you over time. They're like, I
Yep.
like Flint. I want to reach out to him.
Yeah. Yeah. That's exactly it. So yeah, like I said, the engineer in me wants to go make my website scream and it would make zero difference, but I can
Yeah.
spend, 2 days. Yeah.
Mm,
So yeah, it's always checking. Did I actually do something today that was moving me towards making more money?
mm,
And a lot of times I'm like, dang,
yeah.
I wasted some time on something that wasn't legit."
Yeah. And I think the beauty of it is that each day is new and we get to try again and just sort of make ourselves better. It's like minor course corrections because I used to beat myself up if I like would try to build a habit and I don't stick to it. And I'm like, no, I
Yeah.
mean, I think it made myself more familiar with it. And like next time I'll be able to stick it better, you know? Like big thing for me is meal tracking. I hate it. But you know, I started doing it again. So
Really? Is it working?
I don't know. I don't know. Well, ask me in 16 weeks. I got a personal trainer because I'm like, okay, I should probably, get in better shape and stuff. I don't know, just as a little mental challenge. I mean, I enjoy doing
Yeah.
mental challenges. Yeah.
Okay. I
Yeah.
yeah, I work out at 6 a.m. every morning. I go to the gym. I love all the people I work out with. It's like the community thing. So it keeps me going, keeps me healthy. That's really my only morning routine. Get
Mm,
out of bed and go work out. I
mm.
don't cold plunge or journal.
Yes, yes. So I just had this thought the other day, right? That okay, motivation, morning routines, all that stuff is great, but in the world of physics, right? I mean, the world is governed by physics. And motivation, mindset, morning routines, that gives you kinetic potential energy. But that's it. It's just potential energy. The actual action is taking the action, right?
Yeah.
And through action, then you get reaction. Then you can do everything else from there. A lot of people they over index on just
Yeah. Yeah.
mindset, like motivation, stuff like that.
Yeah. Yeah. You're right. You know, it's funny. Alex Hormozy, since he laughs at all the
Yeah.
morning routines, he's like, all the people that brag about their morning routine already made their first 50 million, and then like they they dial back their life and start these morning routines. They didn't get wealthy on a morning routine.
Yeah.
So it's like stop with the cold plunge. If you get up at 4:36 every morning, start working. It's just
Yeah.
'cause you're gonna that's where you make your money is when you work.
That's true. So transitioning a little bit, speaking of working, do you have a team or like what's your setup like?
Actually, it's super slim. It's me. Every once in a while I have VAs I pull on, but in large part I'm running solo.
Okay.
Yeah.
How do you manage like doing everything, juggling all the balls? Like
So yeah, great question. To dial back a bit or go to a different level on what I do, I'm not full-time asset managing a bunch of properties. So I'm more of a capital allocator, investor relations. I have funds like fund of funds. And my thing is really I am the guy that finds the operators who are the expert in their niche, provide my investors a great opportunities where um, if I was if I was an investor and the only operator I knew was the one doing Class B value add assets in Dallas Fort Worth, then I would only be investing in Class B value add assets in Dallas Fort Worth. It's not diversified. A longer story behind the scenes, but I ended up in this position where I'm like, oh, wait, I can partner and raise money for all sorts of asset classes. Investors are getting diversified. I can bring, like, I did a tech fund startup, which isn't going to be normal. I'm not going to make a habit out of that, but I've done developments, I've done multifamily, I'm doing medical office, which is incredible right now. So my investors are just getting a slew of opportunities to diversify in real estate. So I can be location agnostic and asset agnostic within reason. But in saying that, I am not the operator. I'm not the one who goes and I'm spending all my day doing acquisitions with brokers trying to find properties and underwriting. So I think it makes my life a whole lot easier. My number one thing is find investors, keep the pipeline of investors open. So the more investors I have, the more deals I can get. Because right now I have more deals and opportunities than I have potential to raise for.
mhm, that makes sense. Yeah, I think it's a really interesting development. I mean, at least in commercial real estate, is that traditionally it's like reserved for Wall Street, those guys, the smart little pencil pushers and stuff. But nowadays, like there's a way to make it happen. You sort of align with the right team, you sort of do one specific job, and like it all builds up to the same machine that the previous guys were doing in Wall Street. Um, yeah, but with that being said too, like how do you manage your or keep track of the deals or like the operators? Like do you have a system to stay in touch with them, like see what kind of deals they have, vet them out?
So many answers and pipelines. Typically, the operators that I have invested with before, they'll send me new deals as they come. As you know, like especially right now in this economy, like multifamily deals are few and far between. So the operators could be bringing 1 or 2 deals this year. So I'm not flooded with those. I'm working with peers of mine. We have a group where, all of us are getting fed deals. And then if we like a given deal, we'll bring it to the group and we'll do this group due diligence. And it's actually great because I've gotten access to way more things, multiple debt funds and yeah, oil and gas. It's just like the rabbit trail keeps going. There's investments for like flight school tuition, which pays an enormous percent. It's like 18-20%. It's crazy. Yeah, I'm not saying I jump in on all of them, but the access to more deals comes more knowledge that, oh, this asset class exists. Why is this a good asset class, or why is it bad? And you just learn one more thing in the world that's a potential to make money from.
Hmm. I think it is very interesting, the world of, I mean, call it like syndications or like, private wealth and things like that, because, nowadays it's getting out from just traditionally like the vanilla, multifamily apartments, but then now you have like interesting stuff like oil and gas, like flight schools. I heard someone who was trying to syndicate an airplane or something, and it's like
Yeah, yeah.
really interesting stuff.
That came. I had one that was 2 of them. There's one that was the airplane boneyard. So let's geek out about airplanes really quick because I'm an
Yeah.
airplane guy.
Yeah.
The boneyard where airplanes go to die or maybe go into some level of storage. It's down in Arizona. A lot of they put these airplanes down there, and a lot of them get pieced out for parts. And there's a company that you could invest in that, it was a very fast ROI, but you basically invest in this company that's got a bunch of airplane mechanics running out to the desert, grabbing parts off planes, making sure they're refurbished and cleaned and packaged and shipped. And yeah, you can invest in that. It's crazy.
Interesting. Yeah. Interesting. So speaking of too, I mean, how good of a business is like the plane industry in general? Like, are there a lot of interesting opportunities like this? I mean, like that reminds me of Richard Branson. You know how he got started with leasing like a old Boeing jet or something.
Yeah. Yeah. He's a bit of a unicorn. The barrier to entry in the aerospace is so high. Shy away from some of it. I guess I know so much about the aerospace industry that I know the hurdles and
Hmm.
the regulations driving the industry that I just like all the new development of these electric vertical takeoff. And I
Yeah.
got so many opinions on all that,
Yeah.
and I wouldn't invest in them for some very good reasons. Yeah, I would shy away from investing in airlines, mostly because the barrier to entry and success is so high. The margins are low, costs are so high.
Mm.
But like the maintenance side, that's interesting. There's always airplanes that need spare parts. And if there's a company that's just taking spare parts off of old airplanes, I mean, I was like, I didn't invest. I didn't do due diligence and dig in. It wasn't the right time, but
Hmm.
yeah.
Interesting. Yeah. Okay. So back to the world of airplanes. Do you ever seek out like opportunities there, or I mean, based on what you know, is it just like not really worthwhile from what you're saying?
For on the aviation side, you said? What was that?
Yeah, yeah, just like in general.
I don't know. I think there's so many ways to skin that cat that there could be a aviation investment that makes a lot of sense.
Hmm.
I've only had a handful come through, and either it wasn't the right time or uh, I just didn't like it. Like all of these, there's so many aviation startup companies I wouldn't throw any money at unless I was like a multi-billionaire. I'll throw a couple million just because it would be fun money to throw
Yeah.
at them. But other than that, I wouldn't touch it. Way too high risk.
Have you heard of Joby? Joby Air something?
Would be air.
Yeah.
No.
It's like
Is
a
it one of
small little
those
stock.
boutique
Yeah. I think they do like
airlines?
flying cars or something.
Flying car. Actually, I think I have a friend that works for them.
Yeah.
Yeah, I don't know. There's so many of them. I can't keep them straight in my head. Yeah, but any of those vertical takeoff stuff, I mean, just just buy a helicopter.
That's fair.
I mean, this is where the rabbit hole goes of I can get into the regulatory challenges of what these vertical takeoff companies are faced with. Not
Hmm.
only are they using, I mean, every time you add a new technology these days to a thing and you have to deal with the FAA, it's a massive hurdle. It's not just like a one step. You're trying to not only take new technology, new flight controls, new power systems, electronics, and batteries on airplanes. You're throwing way too much of new stuff at the
Hmm.
FAA, and the hurdle becomes taller and taller and taller.
Yeah, I think from what it sounds like, the aerospace sort of industry is like kind of like a big boys game. Like you have to be like super well funded, have billions of dollars to like make this whole machine
Yeah.
happen. So like,
Unfortunately, that's the way it is.
yeah, so that sort of brings us to how like people in the sort of aerospace industry, like they sort of seek elsewhere for investments, right? Like, I mean, for you, it's real estate.
Yeah.
Do you see like patterns in other stuff, or like do most people just do like stocks or real estate?
Yeah, I guess it depends on the profile person you're talking about. If you're talking about someone who's a little bit more of a sophisticated investor who's done alternatives, you start hearing unique things that like, oh, tell me more about that. Yeah, the general run of the mill investors that I typically get, even if they're higher net worth, they are just looking for a way to diversify from the stock market.
Hmm. Gotcha. Looking back, from your journey, Flint, just back to when you started in 2018, like what were like, I don't know, like a couple of the most valuable lessons that you learned along the way?
I think the most valuable is always take action because even if it's a small step forward, one is if you're thinking about it, just get a book or start listening to a podcast. Just do something, move forward. And at a certain point, so here's where the engineer brain starts screwing you on analysis paralysis. I felt like I needed to be an expert in everything, especially on, I mean, once you branch out from the single family world where you are responsible for everything. But when you get into syndications, all of a sudden you realize you're never going to be the expert in everything. And you need to just find that niche that you want to step into and rely on partnerships to be experts in the other things. You have to have complementary skills. And the reason I say that is because I would have continued trying to educate, just continue running down the rabbit hole to hopefully feel like I was an expert in all things, ultimately never taking any action. So
Hmm.
sometimes at some point you have to stop trying to learn because you're never going to learn like diminishing returns. You have to take action in order to actually take that next leap.
Yeah, yeah. It's like the kinetic potential energy, right? All the
Yeah, yeah,
knowledge that you're storing up. If you
yeah,
don't take
yeah.
action, nothing's gonna ever happen. Was there like a moment that you almost wanted to quit, or that was just super tough? And, like, how'd you get through that?
I've had a lot of sleepless nights, that's for sure. When things aren't going well and you have other people's money at stake, really, yeah. I mean, if you're an ethical person, you're obviously gonna be worried about that. Yeah, I've thought about, crap. I can't do this anymore. I'm gonna quit. A lot of times it's I just got to get out of my head and I need to work another day. And the next thing I know, I was just really being a worrywart. Things will
Yeah,
work themselves out. Just keep moving forward, keep trying to solve problems. Even in aerospace, that was the same thing. Maybe that's another lesson from prior life is, yeah, you have massive challenges and you just have to keep trying to solve them.
yeah. I think a lot of people, they forget what hard is, or that they forget that life is supposed to be hard, and that they get paid for solving problems, right? And
Yeah.
for us in the moment, we're like, oh, it doesn't feel good, but it's
Actually,
worthwhile.
yeah, it's good to have friends. I actually had a friend, I was hoping to find the quote next to me. I don't have it, but she said something like, Flint, you've built airplanes. What are you worried about? She said it much more eloquently in a
Yeah,
longer, like poetic phrase, but that's essentially what she said. You've built airplanes. Why are you,
yeah.
you got this?
So what was like your mindset like? Were you very like checklist driven, very like due diligence, kind of like risk measures? Because like I know like aerospace
Mm,
is like redundancy on redundancy.
yeah, there's a lot of redundancy. Checklists were good. And at some point, checklists only get you so far, and you just have to rely on knowledge. And the reason being, someone asked me if there was a due diligence checklist that would work for a whole bunch of asset classes, like between the multifamily, self storage, and then you start getting into debt funds, medical office, and all of a sudden, every deal is so much oil and gas. And you're like, there's no single checklist for that. Like at a certain point, there's the high level 30,000 foot, but at some point you have to drill in and you have to find your way through the sludge, and you're not going to have a checklist to get you there. And you basically, the chase is you know what you don't know, chase those. You got to just get smarter and smarter until you are at a point where you're comfortable enough to move forward or not.
Hmm. And have you ever had like one of those really stressful, like go, no go decisions? And like, how did you think through like ultimately yes or no?
Probably happens a lot. I don't think I have an answer for that. I mean, every situation is so much different. You like similar back to engineering. Every challenge you're faced with has a different solution, and you just gotta make play by play. Just got to be a leader in your head.
No,
It
I
wasn't.
think
There
that's
was a. There's a great quote that was. I think Obama said this. You're like, at any point on critical decisions, like when they were going after Bin Laden, he said that you only get 60% confidence level because you're not going to get any more, and you have to make it the hard decisions based on 60% knowledge. So part of this is full circle going back to taking action. You're only going to get so much information to the point where you just need to make that leadership decision. Go forth with confidence. If your confidence isn't high enough, then maybe some of the best deals are the deals you walk away from.
mm, I think that's an interesting point. I think a lot of people, they assume that when they make the go or no go, yes or no decision, that immediately it becomes obvious to them. But that's just not true in real life. When you're making a decision, like if you want to move forward with a project or not, like a lot more has to come into play. So I think more importantly is the decision is less so important, but what you do after you make that decision, that's way more important.
Yeah. Yeah. That's a good way to put it.
So, okay. As far as just some advice, I guess, like, what is a piece of advice that you would give yourself um, 10 years ago?
Start sooner. It's weird thinking back on it. Back in probably 2009 timeframe, I was thinking about buying an apartment as an investment property, and then it would have been great because the prices were low after 2008. But I hemmed and hawed, and I was like, too risky, 2008. But had I bought that apartment in 2009, I mean, I would have been ahead by 9 years, 9, 10 years on the real estate journey. I would have, even if it were successful or not, it would have been that next step of I would have gained all that knowledge, because you always gain knowledge not by reading books but by doing. And yeah, I would have been there in the heyday of uh, the growth, equitable growth of real estate through all the mid 2010s.
Yeah, I think building that doing muscle is very important, right? Like just making a decision, taking action, learning from it, and the bulk of the work is yet to come.
Yeah,
But just get started.
yeah, yeah. There's a fun story. If you're watching the video, there's a little airplane model up there. That's actually, there's a life size version of that. It's a two-seater aerobatic airplane. It's a kit build. I don't know if you've heard of kit aircraft, that you can buy the kit and build the
No,
airplane.
no,
It typically takes a long time. A lot of people do it by themselves and take 10 years to build an airplane. Me and some friends did that at Boeing. Took us 4 years. But when we bought the airplane, someone was asking, do you even know how to build an airplane? I'm like, does, a, does anyone know how to build an airplane building an airplane for the first time? I mean, a lot of it just comes down to having the skills to with your hands and building stuff. You never know how to build an airplane until you actually build an airplane. So you might as well just take that leap. We bought the kit, and there's instruction manuals on how to build it. There's forums, there's help, there's there's resources, and then you just go. And now I know what it takes to build an airplane by hand. Not only design like a commercial jet, now I've built an airplane by hand.
Wow. Very cool.
So once
Yeah.
again, taking action. I don't
Yeah.
know what I'm doing, but I'm going to figure it out.
That's right. That's right. That's very cool. Okay. Okay. Couple final questions. What's, I guess, like one habit or one deal metric that you think is
Mm,
underappreciated by just people, investors nowadays?
I'll say two things. One, just given the economic challenge right now that's faced with multifamily from post 2022, we are in a slump. We're like, yeah, as bigger pockets, somebody just put it. We're in a real estate stall. The market's in a stall. We aren't necessarily going to crash. We're just like stalling in a flat line. So what I really like is cash flow for one, fixed debt. I mean, I know those aren't, well, cash flow is a metric. Fixed debt is a kind of a need, and stable. So right now we're doing these medical real estate properties, buying dentist offices, just stable. We got leases for 10 to 15 years with escalators in there, yearly escalation clauses, and we're cash flowing 8%. And I'm not worried at all. It's just paying. Our investors getting paid. The assets are stable. The tenants are taking care of their toilets and maintenance and taxes and insurance. It's just like it is the easiest from an asset management perspective. And we got lots of cash flow. I'm just not worried there. On the other assets and multifamily development, there's a lot of things at play. Tariffs are causing costs to go up, to cause development costs to go up, to like there's these headwinds in place. Rents are starting to drop, hurts our NOI. And if you have thin margins with a high interest rate, all of a sudden things become challenging. There's foreclosures out there. There's lots of investors not getting distributions. When it comes to just like, hey, right now the market's a little challenging, maybe you got to pivot and do a different asset class. If you get stable assets with long-term leases in place on high demand, I mean, everyone needs their teeth cleaned. So
That's fair.
maybe sometimes it's best to pivot.
Yeah. Yeah. I think that is interesting, just to be opportunity agnostic, right? So final question, but before that, how can folks get in touch with you? Who are you looking to connect with? How can we
Yeah.
help you?
I mean, the typical people I like to connect with are obviously engineers and tech professionals because we speak on the same wavelength. But a lot of my investors come from all walks of life. Get a hold of me. My company is called Vestus Capital, vestuscapital.com. Most people can't figure out how to spell that. Note to self on branding next time. Just go to investwithflint.com and it'll take you right to my website.
I love it. So final question is, if you have one piece of advice for someone that's listening to this podcast who's wanting to build a better life as an entrepreneur, as an investor, what's one piece of advice you would give them?
Don't quit your day job too soon.
I love it.
I
Yes.
did, and I know a lot of other people that did. Yeah. I thankfully have, because real estate, let's be honest, real estate is feast and famine. Even for like real estate agents selling homes, it's a feast and famine world. So when we're in the investment world, it's there too. So if you want to get into it, don't quit your day job until you are way stable with income. Because right now it's feast and famine with my income, but thankfully I have a wife that's doing really well in her job.
Yeah, definitely. No, that's such an important point too. I think a lot of people they get the romanticism of just burning the boats, going all in. You hear the
Yeah.
motivational videos, but like, no, it's just not true. I think the better playbook, because when you're acting from a position of scarcity, it just like you don't make good decisions, right?
Yeah.
You're all about
Yeah.
like, when is your next dollar coming in? So
Yeah. And then you get desperate. I've seen operators getting desperate, taking deals just to keep the money flowing, and it gets bad.
yeah,
So thankfully I'm not desperate, and I've got a lot of potential earnings. Eventually the kinetic
yeah,
earnings are going to be coming in too, but
nice,
we gotta fight through the storm at the moment.
definitely. Well, thank you for all your wisdom, Flint. It's been fun having you on.
Yeah. Thanks, Leo.